Hi everybody, this is the round 2 review video for the Zoom simulation. And if you remember, I sent this email out about round 1 where you could review the results from round 1, and I gave some hints on round 2, and I gave this 7 ideas of what to do to improve your score. The first one was design cars that have profit margins above 40%, because 40% is where we're starting with the profit margins, and try to increase them by 2 to 5% each round. You can do this by lowering features or increasing prices. And I said to keep a surplus of $10 million as a cushion, because if you don't sell every car you forecast to sell, you may have an unexpected deficit, because your pro forma financial statements are based on selling everything you forecast. Don't overspend on production plants. Some people feel the need to buy extra production plants they don't need. Think of that in real life. If you were to buy a production plant and not use it, then you have all this material and equipment, people sitting around all year long not making one car and paying all the fixed costs for that plant and the $10 million to make that plant. So why would you buy an extra plant? And a lot of these hints and stuff are detailed in my lectures on the Kellogg's and Strategy book. I weave in some talk about the simulation in those lectures. So if you're watching those lectures, it also helps you do well with the simulation there too. Make sure you invest in operational investments to keep your costs down and your profit margins up. Read over the student user guide. Play individual practice rounds. Remember to maximize your shareholders' wealth. You have to increase profits and sales every round. And there's an assessment tab you can click on to give you an overview of your process, your progress, and to see and give you hints to improve. Okay, so when I go right away, when I go into the Zoom simulation and I look at the teams, I see that some teams that did well last round had a nice comeback, because remember, the overview points are year over year. So if you have a year where you don't do so well and you correct course and do better the next year, you'll earn a lot of those points back that you missed. So teams did very well. Remember, you only need 2,500 points to get an A in this project. So it's about 425 points a round you need to earn. Most every team earned more than 425 points this round, and teams earned a lot of points, and most teams earned a lot of points in round 1. So that's going to help you to do well. Remember, that 2,500 points I set as the A in this project, that's a very average score. That's not even a tough score to get. So the bar is set kind of in the average level to do well on this assignment. Now, if I look at the profit margins, I still see 1, 2, 3, 4 teams below 40%. So why are you below 40% in your profit margins when I clearly stated in my video and in my suggestions to improve your score, you have to keep your profit margins above 40%. So if you're one of these companies, well, even if you're anywhere, and remember, I also said you need to increase it by 2 to 5 points. So from round 1 to round 2, you should be closer to the high 40s or 50 percentile range of your profit margins. If you're at 43% and below, you haven't followed my suggestions for improving your score, and this is probably why your score isn't as good as you had hoped. Okay. Now, if you look at stock price, stock prices are going up. So we have a range from $15 all the way up to $36. So stock prices are a reflection of revenues, earnings per share, the number of outstanding shares, things you learned in your Finance 502 class. Return on equity is looking at the equity in your company versus the profits. The higher your profits, the better your return on equity. Total points. Okay, so we have some teams here with points. Most teams are close to or above 1,000 points. So it's been 2 rounds. Most teams are at or above 1,000 points, and you have 4 more rounds to get the remaining 1,500 points. So a lot of teams are right on track, doing very well. Teams that have less points or lower on the points, don't worry, you still have plenty of time to make up those points, and I've seen plenty of teams start the 3rd round with only 500 points and still make it to the 2,500 mark by the end of the simulation. So I don't see that any team so far isn't going to be able to get an A in this project if they keep working at it hard. Okay, operating profit margins. Here, operating profit margins, of course, are lower than gross profit margins because of the mostly advertising. So after your net profits, you have your expenses. A lot of these expenses are variable or fixed, but the one big expense for most teams is advertising. So if you're losing a lot of profit margin between your gross and your operating, you may be over advertising. So you want to review your forecast, your sales demand, and see if you are advertising too much more than the other teams. Earnings per share, of course, is your earnings divided by outstanding shares. And we can see that some teams have, the teams with the higher earnings per share, we have up to three teams with over $8 earnings per share, and a few teams with under number of teams under $5 earnings per share. So what did these companies do to have so much earnings that these companies didn't do? That's the research that you have to do moving forward. Return on assets. This is your profits over assets. So if you bought too many assets that you're not utilizing, like excessive plants, or you have a lot of leftover inventory, your return on assets are going to be lower. So you want to figure out why are my assets not efficient? The more efficient your assets, the more profits they generate, the bigger the score here. Your net profit margin here is basically your taxes are going to come out of your operational costs. Is going to be your taxes, and that is something that is the same for all teams. Their taxes. Revenues per share. Now remember, number one in revenues doesn't mean number one in profits or number one in points. If there are two companies, one with $5 billion in revenue and one with $500 million in revenue, which would you rather own? I would say, I don't know. What are the profits? If the $5 billion company has $100 million in losses and the $500 million company in revenue has $100 million in profits, I'd rather take the company with the smaller sales but the higher profits. So it's all about the profits. Total asset turnover, how looking at your assets and how much sales they produce. Okay, so those are the main charts. You want to review those charts. And of course, you can look at this marketing chart if you want to have a better idea of your marketing spending compared to other teams. So here's the total marketing spending that you could see at your team compared to other teams. And you could look at by individual car. So this is the economy class car. And you see one team here, they really over advertise, and then they greatly reduce their advertising. So this is a team that realized I advertised too much, had too much excess demand, and I corrected course. So this is a good chart area to review. Of course, you want to look at the industry charts to see how you stack up. And we can see here quite nicely that for net profits, most teams increased their net profits from round over round, which was good. Points were a little bit lower in the second round, and that's the usual for the simulation, because the first round you're coming off bad management, that you're taking over the company and you're making good decisions, so you're getting a lot of points. The second round, you're now competing with your decisions and your results from last round, so it makes it a little bit harder to improve, but still not impossible. Generally, points start to go up later in the simulation as well. The second and third round are usually the two hardest rounds to make a lot of points, because you're building your company, you're investing in your company, you're building your company out to grow it. Okay, stock price. So like I said, we have a range between $15 per share up to $36 per share. A lot of this has to do with two factors: earnings per share and outstanding shares. So buying back your stock helps to reduce your outstanding shares, which increases your earnings per share, which pleases investors and increases the stock price. Okay, sales per share. We had some companies were flat, and other companies, all companies went up in sales. We have a new sales leader here at MM Motors, so that is good. And okay, so earnings per share, we have a drop of earnings per share for some companies. So you need to ask, why did my earnings per share go down? We had some companies here that the earnings per share went up. So you see how this team greatly reviewed their strategy, changed their strategy, was greatly able to increase their earnings per share. That's why they have #1 points, because that's what investors want to see, a real improvement in your earnings per share. And most other teams were steady in increasing their earnings per share. And remember, what I'm going to do here now is I'm going to go in and go into the demo. This is like my practice round, and So this is, I'm in I'm in year 3 like you guys. So so I'm going to start my year 3. Before I start year 3, I look over my profit margins. I'm not starting at 54%, so I need to know to do better than that in gross profit margins. I look at my forecasts. Now in the forecasting area, I see I did very well in year 1 and very well in year 2. So I'm not making a lot of points here in forecasting. I'm just trying to prevent losing points by setting up a bad forecast. So forecasting is not an area where you really make a lot of points. It's an area where you're trying not to lose points. And I had investments in operations, which gave me 100 points. I had a surplus, and all my revenues and financial ratios did well because I increased my profits. So now, and remember, I see some teams filling out these reflective observations. That's not a requirement. I made that very clear in in multiple places in the course, in the assignment, and the overview of the course. So you don't have to fill out the reflective observations because this is a condensed class. We really don't have the time to do that. Next, I would review my assessments. My revenues are low, and I'd say, okay, so my forecast is bad. I should read a user guide. I should look at market potential versus actual. Okay, and my stock price is a little low. My total return assets are low because I built out a lot of assets. So I review my assessment thoroughly to figure out what I could do better. I review the charts. I look at the industry. So what did the number 1 company do? So I go to the number 1 company and I look for how they put their cars together, what their market potential was, what their financial results were. I do some corporate investigation to see what are other companies that are number 1, what have they done that's better than what I did, and try to emulate and incorporate some of their strategies into my strategies. Just like Toyota does with Honda and GM does with Ford, and so forth. There's my financials I may want to look over, and I go back to my sales. So now, before I do my sales, I should always look at my performance chart, and I want to see what the suggestion on the suggestion for to increase my sales told me to look at my market versus potential. So I see here I did good with my economy, but I could have sold a lot more. I only sold 3,000. Could have sold more sedans. I could have sold more trucks, and definitely luxury. I've lost the possibility of selling 400 extra cars. I only sold 2,000. I could have sold 4,000. So now with that knowledge, I could use that moving ahead to do my sales round. So in sales again, I wouldn't copy what I'm doing here. I'm just throwing numbers in real quick. So you should probably not try and copy what I'm doing here. This is just for demonstration purposes, but I'm going to, and I see that my gross margins below 54%, which means I'm going to lose points if I do that. So I have to modify it to make sure that I can get above, there we go, 56. So as long as I'm above my last round's profit margins, I know that I'm going to make some points. And I see that the customer expectations have gone up. I see that customer expectations have gone up. The amount I can sell the car has gone up. So things have changed. I have to be aware. So I can't be plugging in the same numbers I had last round. And I'm just going to, again, just want to make sure that my my profit margins. Okay, so I'm getting a warning. Can't go that low. Okay. Now my profit margins are going to be above last round, because that's really critical. Because and if you follow stocks at all, and investors come out with disappointing earnings, stock prices go down tremendously. So that's a lesson that you need to learn with this simulation, and it's maximizing shareholders' wealth. That's what all the strategy of corporate financial people is about. Okay, so sales data. Now in marketing, I'm going to just enter this offline because it takes a long time to do this, and I'll come back in production. Okay, so now in production, and I see that I need to buy some new plants because I'm increasing my forecast, and I'm just buying exactly what I need here. 2658. I had some leftover inventory last round, which did hurt that's why my total asset turnover and some of my asset ratios weren't as good because I had leftover inventory, which inflates my assets. They're inefficient to have leftover inventory. I want to sell exactly what I forecast. Okay. And I'm going to increase my operational investments to keep my company up to date in the newest technology and robotics. Okay, so when I get to my finance page, I go right down here and I see I have a nice surplus of $60,000. So I'm going to go and I'm going to buy back some stock. Maybe buy back a little debt. And you see that the interest rates change as you lower your your debt. Okay, so now there's my surplus is good, so I think everything's good. So I'm going to process the round. And I got 500 points, which is good because I'm looking to get over 425 points each round. So now I'm in year 4, and let's see. I was able to increase my profit margins by 2%. My operating profit margins and my net profit margins followed through because I was very conservative, and I analyzed my advertisements very well. I had my operational investments, and I had a surplus. My market cap went up. So my forecasting was good except for truck. I didn't forecast well for trucks, so I lost some points there. But I forecasted well in my other cars, so I'm very happy with that. And if I check my assessment, my revenues are still low. And if I look at my performance charts, I see that I'm doing good here on my sales have increased, my profits have increased, my net profits versus sales. These are my profits and sales have been going up nicely. My stock price has moved up from $27 to $49. My earnings per share have moved up from 6 to 10. My points are a little bit lower because I started the first round. I did very well, like a lot of you did, and 500 and 500. So I'm completely on track. As long as I get over 400 points, I'm happy. And if I look at my forecasting, it's a little bit better. So I didn't sell as many. I had 200 cars I gave for economy, only 100 for sedan. My truck was, I sold all my trucks I met my demand on my trucks, and I'm only 71 cars away from my luxury. So that was very important. I did improve my forecasting ability. So once I review that, I know that I'm ready to start year 4. So okay, so this basically some ideas I have processing the round and doing well. So use those practice rounds to help. You can reset them. I know there was a potential issue. There wasn't. I just thought there might have been. I wanted to check with the company, but reset them, test new strategies in there, and keep moving forward. So, and if you haven't already done so, make sure you read this advice. I'm going to send it again once I'm done processing this video. And I hope that this video helps you to get your company back on track if it's off track, or to maintain course if you're doing well. Okay, thanks a lot, and I appreciate your time, and I will see you again soon. Bye-bye.